Welcome to the Rose Show podcast. Thank you, everyone, for joining us today. I am here today with the profound and multidimensional Brian Lund. Brian, you've been an active trader for 37 years now, since 1985. And you state that you're focused on technical analysis, the 80-20 rule. Interesting how you use the other 20% is instinct. You're a drummer, a book nerd. You're always caught quoting Stoic principles. I love that. And you're also a podcaster where you talk about the intersection of markets, money, and life. Makes sense to me as we live in a multidimensional world. So everything comes together, and trading and life are quite analogous to each other. So, Brian, fellow book nerd, how you doing today in Southern Cal?
I'm doing great. That is a fantastic intro. I'm just going to bring you with me wherever I go and just have you give my bio. I love that. I have to have my kids hear that because they'll be like, what? That's you?
I know, right? Like, who's that? Thank you so much. Before we delve into all these many topics, because you are so multidimensional, and I'd love to know about you being a drummer as well. Tell us how it all began, how you decided you wanted to be a trader 37 years ago, and just tell us about yourself.
Wow. Okay. So much to cover. So back in the day, there used to be these things called newspapers, right? And they would deliver them to your front door. And the newspapers had multiple sections, one of which was the business section. And I was fascinated as a kid by the business section. I didn't know what it meant. There were lots of numbers. They would, print the stock numbers from the day before, if you can believe that. And so I would pour through it, and I always felt like it was a puzzle to be solved. And if I could figure out what that puzzle was, somehow I could make money. So I would follow that. And then when I turned 18, I decided, well, I'm going to actually put some money in the market. Now, back then, there was no such thing as an online broker. So what I did was I drove to Sears, because back then, Sears used to have Allstate Insurance and Genworth Financial, and then they had Dean Witter, which was a broker back in the day. So I walked into Sears, and right there between the Craftsman tools and the Kenmore washers was Dean Witter. I walked up to the broker on duty, whose name was Randall Woodworth. I swear to God, that was his name, right? Goes by Randy these days. And I said, I want to buy $300 of Altos computers. Now, I wasn't really sure what Altos computers did. I figured it probably had to do with computers because that was in their name. But I'd seen them on a local cable access show. So I thought, hey, why not invest in this? So I said, yeah, I'd like to buy $300 worth of Altos computers. And he said, okay, call me back in 6 hours and I will tell you what price you got filled at. And that was my entree into the world of trading.
Wow, that's so awesome. And it's wonderful that you remember it to every detail. Even
I have the slip. I literally have the first so they gave me a physical slip, right? The like a carbon copy. It's around here somewhere. And it's 37 years ago, 1985.
Wow, you're definitely passionate about trading.
38 years.
38 years. Oh, yes, 2023. Time flies.
Yeah.
Obviously very passionate, and must have made quite an impact on you back then to have not only started then, but you've stayed with it for this long. I mean, 37 years is quite a long time.
And to be fair, back then I wasn't doing anything like what I'm doing now. Like I'd like to think I know what I'm doing now somewhat, but I certainly didn't know what I was doing back then. And it took me, a long time to figure out what risk was, what methodologies were, all those things that people talk about all the time today on Twitter and FinTwit. But back then, it was a real opaque world, especially if you weren't in financial services. I was a 18-year-old Southern California kid, as far away from Wall Street as you could get. And the idea that I could ever be active in the market or be a trader just seemed like it was crazy. So I was too stupid to know that at the time, which I guess worked out.
So yes, the opaqueness still exists, but it's a little different nowadays. But so how did you start out? You went there, and then how did it work out for you? What were you doing? What was your part in the trading?
So the first trade, the Altos computers, I think it was a scratch, didn't really do much. And then it was really at that point, like people, you'd read about something in the Wall Street Journal or an Investor's Business Daily, or someone would say, oh, I heard about this company. That's kind of how you found your information. The next company I invested in was, can't remember the name, but they had some idea for putting caffeine in gum. Was that going to be their big product? So I invested in them. It was a scratch. The third company that I invested in, that was what changed everything. So my buddy had moved out and was living on his own. He had 3 roommates, one of which was a really old guy. He was like 24, 25, right? And he was a computer programmer. And he told me, hey, this company that we're working with is about to become the default desktop publishing software for all of the IBM computers, right? Which at the time, computers would be sold preloaded with software. So to be on IBM's, on their computers was a big deal. He said, you should really invest in this company. I said, okay, what's the name? And he said, it's called Adobe, right? So I went and I invested, I don't know, $1,000 something in Adobe. And sure enough, he was right. They announced a couple of weeks later that they were now going to be on all IBM computers, and the stock just went crazy. And then a couple of weeks after that, someone else, maybe Hewlett Packard, announced that they were going to be the default, and it went like, and in about a month, I made more money than I had made on every part-time summer job that I had, from that point back till I was 13. And I said, this is it. I'm going to be a trader. I should be a multimillionaire within 6 months. And that's when I really started getting into trading more actively. And I'm sure you can guess that I wasn't a multimillionaire in 6 months. And looking back, it's actually one of the worst things that can happen to a new trader, in my opinion, is to have a lot of easy success right off the bat, because you have no context. So you think, oh, this is how it is. This is going to be so easy, right? And especially if you don't have risk parameters in place, you don't know what you're doing. So the next few years were really rocky. I found some winners. I found some losers. Along the way, I started a business. So, the road from here to where I am here was not a straight line. And it kind of mimics something that my great uncle told me once when I was like 13, 14. He said, unless you are a doctor or a lawyer or an engineer, where you have to go through a very specific set of schooling and experience to get to the end result, most people are going to go, they're going to go here, and then they're going to go over here, and then they're going to go over here. And by the time they've landed in where they're going to finally end up, it's going to be way somewhere different than where they thought. And what's different, of course, today is that people don't have those linear careers, right? You can change careers and change what you do every 2 and 3 years. You can even do them all at the same time. So it's been an interesting journey, but it certainly hasn't been a straight line.
Absolutely. Non-linear makes a lot of sense, especially in trading. And we are excited to hear about the mindset that you adopted to have that staying power, because the losses are hard, and it's through those losses that we learn the most. And the challenges always bring forth greater opportunities if we look for them. And it's about remaining positive as well. So before we get into all that, I want to ask about you being a drummer. I read in your bio that you've been a drummer most of your life. So that I assume that when you started trading, you were a drummer at that time.
So I actually started trading and playing the drums very around a similar time frame. I started the drums late, I think, as I was about 18. Most people that are, drummers that are my age started really young. But I had this thing where my mom was not into the drums, right? And she did not want me to have a drum set. And for years, ever since I think I can remember the first time I remember like tapping along to songs and thinking this is cool was like probably 2nd or 3rd grade. But I think my mom thought that you get him the drums, he's going to not go to school, he's going to drop out, he's going to be a hippie or whatever it was back there, punk rock, right? So she wasn't into that. And then when I was like 18, I remember I said to her once, she was big about if you earn your own money, you can spend it on what you want. I remember I said to her once in front of a big family event, I said, "Hey, Mom, if I took my own money and I bought a big stereo, right, but I didn't play it loud when you were at home, would that be okay?" She said, "Of course, it's your own money. You can do that." I said, "Well, how about if I buy a drum set, but I just don't play it when you're at home?" Right. And she was kind of stuck because my whole family was there. They're like, "What do you think, Sally?" She was like, yeah, I guess you can. And I don't think she thought that I had saved up enough money. And I think she probably didn't know how much drum set was. So next day I went out, bought a drum set, and that started, my playing career, so to speak.
That's awesome. First thing, my observation so far with you, Brian, which I admire so much, is your
You're
staying
going to
power.
psychoanalyze me? Is that what's going to happen here?
No, actually, I'm just
Go ahead,
impressed.
bring it on. Come on.
I know, right? Let's do it.
Yeah.
It's your staying power. You started being a drummer, trading for so long, and you've stayed with it, because I know, being in business and trading and all kinds of financial endeavors, that it's about staying with a discipline and working your way through the difficulties, because there's always difficulties. I know FinTwit like to make people think that they're only winners and everything's so rosy and great. But real life is about overcoming those challenges in the difficult times. So that mindset that you have, that you were able to stay with it when the times were tough, is very impressive. And we're going to get into all that. I want to know, what type of music do you play? And are you in a band, or have you been in a band?
So I've been in some pickup bands where you just have friends that, play, get together, do a gig here at a bar there. But I never really had the desire to be a professional player. I mean, if someone had said to me, if they waved a magic wand and said, "You're a professional player," great. I just like playing. I like everything about, like, I'm ADHD, like literally diagnosed ADHD. So I always have a lot of energy, right? I'm always like, and so it's been a great outlet. And I just look, every song that I hear, I always view it from a drum standpoint. Like, for example, I don't like Pink Floyd because Pink Floyd doesn't really have a overwhelming drum beat to their songs. They're very ethereal, right? Most people go, Pink Floyd's great. And I'm sure they are, but it just, I don't relate to, because I look at everything from that drumming standpoint.
Interesting. Thank you so much for that. Yes, the drums, I heard, burn a lot of calories every time you play them. It's a very high energy instrument. So,
I saw a study where they actually they had a drummer like hooked up with electrodes and a face mask and everything, and they estimated that he burned up to 500 calories, I think, per hour. It was some ridiculous amount. And I remember thinking, wow, that's a lot of calories. So you're right. It is, you're using all four of your extremities at one time. And depending on how intense you play, it can get really, you can really work up a sweat.
absolutely. Well, I guess it goes hand in hand with all those gourmet food pictures I see from you. Are you a chef as well? I've never seen anyone so organized with their ingredients, and you make some quite tasty looking meals.
Right. So here's the picture, right, of the organized ingredients. And then if you were just to pan right or left, you would see all the packages and all the refuse, right? So I'm not that organized. I just, I make dinner 4 or 5 nights out of the week. My wife makes dinner 3 nights out of the week. So it's fun. I enjoy doing it. And it's a real interesting way to kind of de-stress at the end of the day. And then it's fun to share. So it's cool.
I love it. I love that you are, doing your passions. You're living the good life, you're living life. And that's so important. You're doing all these different things. And that I see why you've never had coffee. Is it really true you've never even tried coffee?
Yeah, well, I'll tell you the story and you tell me if I've technically tried it. So
Okay.
when I was 4, 5, 6, I came in from playing outside. My mom was entertaining a friend. They were sitting there drinking coffee, smoking cigarettes. This was back in the 70s. Mm-hmm. And I said, "Hey, what's that?" And my mom said, "It's coffee." And I said, can I try it? And she said, sure. And so I took a sip and I immediately spit it out on the rug, the white shag rug, because it just tasted so horrible. And I guess that imprinted on my head. And after that, anytime the opportunity to have coffee came up, I was like, no, no, no. And then by the time I was old enough to rationally understand what coffee was, I was like, it's probably too late for me to start drinking. So just never did.
Cool. I guess you've avoided those $5 lattes at Starbucks. Good for you. How about
Yeah.
tea? Are you a tea drinker, like green tea or anything like that?
Right here. Yeah.
Love
This
it.
is my Ember mug, right? This is a must have, my Ember mug. My Wi-Fi controlled mug is what I use to drink tea every morning. So
Awesome. I'm a big Japanese tea sencha drinker myself. So awesome. I love tea. So good for you. At least you have something there. I couldn't
yeah,
imagine having.
I tend to go for black teas. I like
Mm.
English breakfast or Earl Grey. My wife does more of like the jasmine type
Ooh, I
teas, the
love
green tea.
jasmine, or
Yeah.
oolong is good
Oolong,
too.
yeah, oolong, yeah.
Very good stuff. Awesome. So, book nerd, you call yourself a book nerd for a reason.
Yep.
Are you always reading books? Do you have stacks of books all around you? I see a beautiful stack behind you on the shelf there. Tell us about your books. Have you always a lifelong passion? When did it all begin? And what do you enjoy reading?
Yeah, that's an interesting question. I remember as a kid, when you have time to burn after school or when you have time to burn on the weekends, this is in a era pre-internet, pre-cell phone, when you actually had to figure out stuff to do. Some people did sports, some people went to the beach, some people just got really good at hanging out. For me, I love going to the mall because at the mall back then, there were at least 3 or 4 different bookstores. So you would have B. Dalton or Pickwick or Scribner's. And I love getting lost in the racks and looking at the books and picking them up and reading them. And I always felt that there were answers in the book. And I guess I was looking for answers. I was probably, didn't know what I was going to do with my life, maybe a little insecure about things. So I thought that books were where I could find answers. And so I would buy books, and I did that for a while. And then I got to this weird phase in my like late teens because my mom would be like, well, you bought all these books. Have you read them all? And I was like, well, I've read some of them, but I haven't read them all. And somehow I picked up this idea that books are bad. You shouldn't buy a book unless you're going to read it, cover to cover. And I was wasting my money, wasting my time by buying these books that maybe I would or I wouldn't finish. So I didn't buy books. I wasn't involved in books for 20 years. Didn't really read a lot of books. And then at some point, when I became a little more self-actualized and started becoming, questioning some of my family of origin ideas, I said, I don't know, can we curse on this
Of
podcast?
course,
Probably not.
anything you want, be
I,
natural.
I, I said, who gives a shit? If I want to buy 20 books and dip into some and not look into others, who cares? I like books. I like them aesthetically. I like the feel of a book. I like the smell of the book. I like the art in the book. I like, finding out whether it's a first edition. Everything about books I love. So I decided about 10 years ago just to embrace the world of books. And so I collect first editions. And I also, I'm a big fan of books on books, which most of these back here are. And if I see a book I want, I'll buy it. And I don't burden myself with this, well, I have to read it. I'll go into it. And if I like it, I'll read the whole thing. If I don't like it, I'll put it back on the shelf. I think it was Thoreau that said you should read like a hawk, meaning you read, and if it's something that you're into, you get into it and you go, but if it's not, you go, okay, off to the next thing, right? You can't waste time. It's not like you have to avoid that sunk cost fallacy where, well, I bought the book, so I have to read the whole thing. They're like, no, that's totally wrong. So some of these books here, I've read cover to cover. Some I've selectively gone in and dipped in and out of. Some I started reading and said, that's not for me, but I love books. So
I love that. Oh my gosh. I have to share with you similar, very similar mindset regarding books. Well, my husband is a total book nerd. I mean, completely. We've been married almost 25 years now. And when I met him, I mean, he's always been like, he loves books like you do. And I love books as well, but he like reads them. And we once found this amazing bookstore in Portland, Oregon called
Hmm.
Powell's, and it's this huge, like 2 or 3 story. I mean, it was just so big as a used bookstore. And we went crazy in there. So he's the kind that likes to always go through Barnes and Noble, just walk the aisles, read books, and like just savors that. Like we'd spend days at the bookstore. And so Powell's, they actually have shopping carts, like a grocery store shopping cart. And he's
Yep.
like, this is my kind of bookstore. And so he would load up the carts and yes, like just buy the books. And, I feel the same way. The sunk cost bias is something we need to be aware of and we need to overcome. There are many books that I purchased because I found I was excited in the store. And then it could have been another week or two, I wasn't in the mood to read. And you know what? It's fine. Because what I've noticed, it depends on me. Books are about you. Everything in life is your perception and how you see the world and how you feel and your different, what you're going through in life at that time. There are plenty of books that I've had on my shelf for, let's say, 10, 15, 20 years that I didn't read for 10 years. And then now, or like just a few years ago, I'm like so interested. And I'm like, wow, I have a bookstore at my house. That book that I, want to read, that I never read, I want to read it now it's available. So it's like it just goes around different time periods. Plus, I enjoy rereading books in different times of my life. And it's amazing how it's like I see and I read different things in the book and I notice things differently. So it's fascinating. And you like take on that other person's like mindset and you
Yeah.
understand. It's like you travel the world in the book. And I tend to read nonfiction, so I'm always more of a nonfiction and I read all kinds of topics. But yeah, I love just the feel of the book in my hand. So can I assume you're not a Kindle person?
That's a good question. I do. Here's what I'll do. I have kind of like a routine. So on Saturday morning, very early, I get up before my kids are up, before my wife is up. I do my stretching, meditation, et cetera, et cetera. I go to Starbucks. I get a large or venti, I guess, English breakfast tea, and then I read the Wall Street Journal. One of the great things about the Wall Street Journal on the weekends is they have a section called review, and review is just what you think. They review a lot of the new books that come out. So what I'll do is if there's a book in there that I'm interested in, or if I find out through some other way, I'll flag it, and then I'll usually get the sample in Kindle and I'll read it there just to see the sample, to see if I'm interested in. And then most of the time I'll actually order the physical book. So I went back and forth on this a lot because I understand the value of highlighting things in Kindle because it's super easy to just export your highlights. But for me, again, going back to the ADHD thing, for me, if I really want to remember something from a book, the act of highlighting it and then writing it down or putting it into like Notion, for me, that connects that quote or that section more than if I just hit a button and I highlight it. So for me, that's the way I need to absorb the information. So if people want to use Kindle, I'm totally for it, but I just like having that heft in my hands, and I like the tactile process of highlighting and then moving content over, and it just sticks with me better.
Absolutely. I agree. Same here.
And
But
let me
yes,
go back to
yeah,
that sunk cost fallacy, because that I think as we go through our lives, hopefully if we go through our lives and we're being mindful, we're being thoughtful about our lives, we identify things that are really major turning points. And one of the major turning points in my life was understanding that sunk cost fallacy and how it can really, really hold you back. And I give this analogy when I talk about this. It's probably not the best analogy, but it relates to me because it happened to me at one point. So a buddy of mine was coming into town and he wanted to see a certain band. I can't even remember which band it was. They were playing at a festival somewhere, and I really didn't like the band. And the type of music that they were playing at the festival, I really wasn't into, but is my buddy. And I was like, okay. And I said, I'll buy the tickets. And the tickets are around like $100 a piece, whatever. At the very last minute, something happened. He couldn't come into town. Right. And he said, well, I'll just pay back for your ticket. And so I didn't have a chance. I couldn't sell the tickets. I had this $100 ticket. And I remember saying to my wife, well, she said, well, you're going to go, right? I said, no. And she goes, well, you spent $100 on the ticket. And I said, I know, but here's my choice: to spend $100, drive, have to park, spend 2 hours watching a band or bands I don't like, and then drive all the way back, or just I spent the $100. Like, which would you do, right? The $100 is gone. But I know a lot of people that would say, I have to go to that concert.
Mm-hmm.
I have to sit there and watch that band I don't like for 2 hours because I spent $100. But you're out the $100 either way.
Mm-hmm.
Why lose 2 or 3 hours of your life? And I think so many times in life, people do things that they shouldn't be doing, or they waste time on things because they're anchored to it by this sunk cost fallacy. And I think once you realize that and you analytically go, it makes no sense, it's such a freeing thing. You can just say, yeah, I don't need to do that, and take that time and put it to some better use.
I love that. I love that you brought that up. Please bring up all these thoughts that you come up with at any time, because this is just exactly what this podcast is about, is just enlightening each other and all the listeners. And sunk cost bias is one of the top, especially, let's talk about trading. Like I always say stop losses are like a sunk cost bias as well. It's better to take that small little loss than go and hold on, because you're like, I can't take that 7% loss. No, I'm just going to hold on. And most likely, especially in this type of market that we're in, that 7% down turns into maybe a 20% down, or even 15% down. So I always say, when I talk about trading, that take that smaller loss that you're already down, and then don't hold out to assume that it's going to come back, because it probably won't. Maybe you'll get lucky and it does, but that creates bad habits. You need to follow your rules and establish a rule before you enter the trade. But it's the same concept of, just because you committed yourself to a certain amount doesn't mean you have to stay with that decision. It's already gone. Like you said, it's a sunk cost. It's already gone. So you always, a good shield against it is to ask yourself the question, would I do this right now if I had the opportunity to make the decision today? And usually it's no. So why throw more good after bad? And that $100 in that situation is gone, but I'm going to suffer. I'm going to make myself go to that concert. That doesn't make much sense. But I think by becoming aware and then asking ourselves these questions, we can help overcome that huge bias there. And then also another way to overcome it is you ask a non-stakeholder their opinion, and that usually works as well. Someone who doesn't have that dollar amount or that time or that commitment. You know what happens too with the sunk cost? Being a business owner, and I've been in business for a long time. My husband and I tend to run businesses together, and it's about having a worker that works for you for, let's say, like 5 years. And you've put that time and effort into working with that worker and, maybe grooming them for certain positions. But then at some point, they're just not working for the company. It's just not working out. We're either growing or dying. So the business evolves, the business grows, and that person's just not suited for the role anymore. And we tend to hold on to them, or, we try to change the role for them and make it work. But at some point, you just got to say, it's just not working out. But because we put all that time and effort into something, to someone, we feel like we have to stay with it. So
yeah, and that it doesn't even have to be the time and effort you put in over a long period of time. For example, I ran a business for 25 years, and one of the things I learned later, unfortunately, is the way to hire best is to fire quick. Think about it this way. When you are interviewing someone, they're always going to be on their best behavior. They're always going to give you the right answers. And it's very hard to really parse out whether someone's going to be good or they're not going to be good. So you hire someone. Once you've hired them, when they have to perform, they have to do what they're expected, you can tell really quickly whether they're going to do well or not. And I think a lot of people will say, well, this person's really not living up to what they promised or what's expected. But I went through the whole process of hiring them and getting them on board and everything. So I guess I'll manage them and I'll manage them and I'll manage them. And a lot of times it's just better to go, you know what? This was a bad hire. Sorry, part ways and start again. But again, that sunk cost fallacy, people are like, well, I've already put some time and effort into it. So you can see it in very short-term frameworks, and you can see it in very long-term frameworks.
Absolutely. There's a saying slow to hire, quick to fire.
Yeah.
That's exactly to your point, that we should take our time to hire. But yeah, if we see something that doesn't seem right, be quick to fire. So yes, absolutely. Whether you put in just a few days or a few years, it's the same fallacy that we all fall victim to. But being aware is key. I think that's awesome. Did you study all these biases? Maybe in one of your books, right? You read Daniel Kahneman, and I'm sure other books on these topics of decision making, right?
Yeah, I mean, I've got them from all different places. The one about firing fast actually is from Gary Vee. I saw him talk about this 5-6 years ago, and I remember thinking, God, why didn't I know that when I had my company?
I know. Why didn't we know that years ago? But that's how life is. We learn as we go.
Well, and it's also that I would like to think we're probably decent people, right? And it's very easy to be here on a podcast and say, the best way to hire is to fire quickly. But when you're having an interpersonal relationship, when you're looking at a human being who you realize has a family, right, has responsibility, there is a compassionate part of you that says, well, let me just try a little bit more and a little bit more.
Exactly.
And it's the right way of thinking, but overall, it's probably bad for the business. It's bad for you. So you're kind of sacrificing their well-being for the greater good, I guess.
Exactly. We're humans, we feel for people. And once you have a worker working for you and, even just a few months, you feel like they're part of the team, they're part of the family. And we believe in a democratization of leadership. So everyone's like part of a team, and it's all about teamwork. So yeah, it becomes very hard because you're personally vested in that and you just feel that connection with someone. And it's very challenging. Absolutely. And leadership is very tough. Running businesses is very challenging, especially with the human resources element. Another bias that appears with the sunk cost is the opportunity cost bias. And, that they sort of work together, because if you don't cut your losses quickly, you have the opportunity cost arise. And that happens with trading and in life. Just like I love what you say, it's the intersection of trading, money, and life, because it absolutely is. Trading is analogous to life, and life is analogous to trading. I think that we learn so much about ourselves in trading, and it teaches us so much, and the things that you don't even know about yourself, because you get that feedback, that instant feedback from your trades, and you're learning like, oh, this is working for me. These are my weaknesses, and learning about yourself. So opportunity cost is something that we sometimes don't always think about when we want to do our stop loss and cut our losses quickly. We're like, even though we are in this trade, if we cut now, there are other opportunities out there. So it's also very important with the opportunity cost. Do you talk about that bias with your community members?
Yeah, I mean, just like we were talking before, it doesn't even have to be a short-term opportunity cost. It could be long-term. So one of my favorite dead horses to beat are the pot bulls, right? People that are bullish on pot. Mm-hmm. And if you watch the pot ETFs, MJ or MSOS, you can see that for 2 years they've just stair-stepped down. And during that whole time, all the pot bulls have said, Just you wait, just you wait. That's their investment philosophy. Just you wait. Well, as they're waiting for something that may never happen, how much opportunity cost are they losing holding on to these positions for 3 months, 6 months, a year, 2 years? So it's not just the opportunity cost on a specific trade, but it can be an opportunity cost on your portfolio if you are just dug in and you're holding on to things that are not performing. It can really hurt you in the macro opposed to just the micro.
Absolutely. And that's why timing the market is important, to know when to initiate trades based on the trend. Some people like cheap prices and they think, oh, this is down so low and, this is a cheap price, and they could be anchored to that price. There's the anchoring bias. We assume that based on maybe the recency bias, there's another one, because prices were just at this certain level recently, that no, this is much lower. This is cheap. I should buy because it's a good buy. But there's so many other factors in that. Plus, we have a different macro environment now than we did in 2020, in the recent past, that maybe things can get cheaper. And we've noticed that many things have gotten cheaper. So that's why I think we can both agree, buying the trend. I think you're a trend buyer. Is that correct?
I would say, I always want to be moving in the direction of the trend, trading in direction of the trend, although I'm not a big short trader. So what I will usually do in a down market is I will wait for a counter trend rally and try to trade that. But going back to what you were saying about buying cheaper, that's another bias. I'm a big believer that there's the world, and then there's the world of trading. And a lot of the ways we think in the world do not translate into the world of trading. This is one of them. So for example, you're a kid. Let's go back to Sears, right? You're a kid, you're 12, you go with your parents to Sears, and they want to buy a new refrigerator. So what are they trying to do? They're trying to buy that refrigerator at the lowest price possible, right? So, well, this is on sale, or this, we have a special, and well, let's wait till it gets lower, or let's buy a car, and once it drives off the lot, it drops in price. So we want to buy a used car. So there's always this idea, this bias that it's better to get things at a lower price. So we take that bias that we're not even aware that we have, and we bring it into the market, right? Now, on one side, you have a wasting asset, right? A refrigerator, a car, whatever it is. It's just going to, it's going to go down in value. That's the way it works. But on this side, you have an equity, right? And it will go down, it will go up. But we say, okay, well, it's cheaper now, I'm going to buy it. Oh, it got cheaper, I'm going to buy more. Oh, I'm going to buy more. When we should be saying, no, we want to buy this when it's getting stronger. Or we want to buy it when it's temporarily getting cheaper in an overall uptrend. So for example, you're buying a stock that is in a uptrend in relation to the 200-day moving average. Maybe you're buying it when it hits the 50 and shows some strength, right? Okay, that's reasonable. But a lot of people don't put two and two together, and they don't understand that they're taking that wasting asset pricing model and they're bringing it into a world where that just does not apply.
Absolutely. Yeah. The depreciating asset model from life. Yeah, absolutely. The equities market is a little different with that one. And yeah, you want to buy. In my opinion, that's how I see things when the overall trend is going up. Otherwise, like that quote, this is dead money for a while. It, like you said, to your point before, the opportunity costs comes in. Let's say I buy something that maybe has stopped going down, but could just be staying on that sideways stage one basing for who knows? Well, some companies can base for a long time, 6 months, a year or so. And if I hold, like you said, the cannabis stocks, these people were saying, oh, it's going to be great. You're going to miss out. It's great. Well, in the meantime, there are plenty of other runners that have occurred that you could have made your money elsewhere. But instead, some people just choose to hold on and wait. And, no knock on them. Some people don't like to do any active trading. But yeah, it's an opportunity cost. So excellent points, how life ideas and principles may not interpret well and be applied in trading. So thank you with that. Let's go, before we go into more biases, I want to talk about meditation. You mentioned meditation, and you do speak of mindfulness. Are you someone who meditates often? And if you do, what type of meditation do you like?
So I try to meditate every day. Being someone who is ADHD, one of the key issues that you have when you're ADHD is you're not mindful, right? You don't recognize when you're going into certain patterns that are not productive. For example, the way it used to be is I would, it would be Friday afternoon, I would start a project. And before I knew it, it was Sunday afternoon, and I had 10 projects that I had started and were all in different states of array, but none were finished, right? Because I wasn't cognizant, I wasn't mindful that I was moving from one project to start another one. I was just doing these automatic things. So part of going to therapy is talking about being mindful, being able to identify these actions and saying, oh, no, I don't want to go there. I want to stay over here. And obviously mindfulness and meditation go hand in hand. So the way that I do it is really simple. I just use the Headspace app, which I love. And every morning I try to get up and I try to stretch, I try to meditate, and I tried to journal for 5 minutes. I use this thing called the World's Most Dangerous app, which is basically a timed journal app where, like, once you hit the cursor, if you don't keep moving, it will actually erase everything you have. So yeah, meditation is definitely part of my process. I don't do it every morning. I try to do every morning. Sometimes I just can't, but that mindfulness really helps you to identify when you're going off the rails. And of course, this is super key to trading, right? Just those rationalizations you were just talking about, like, oh, well, it hit my stop, but maybe I'll let it go. Those can be automatic thoughts. We realize them, but we don't really realize them. But being able to stop and go, oh, wait a minute, this is where I'm making that mistake. That same mistake I made over here where I lost 20%. Let's not do that. So I think mindfulness, I think meditation, and I'm a big proponent of therapy for certainly for traders, but also for life.
Awesome. Thank you so much for sharing that. I think meditation is key. I tend to do Zazen meditation. I don't do it as much as I should, but and it's absolutely necessary. Helps me so much. There's an interview I once listened to. Hugh Jackman was speaking about his meditation practices, and he uses transcendental meditation. And he spoke about the monkey mind and how we need to tame the monkey. And we are essentially humans, especially ones that are very intellectual, which I know you are. We can be overthinkers, and our minds can run on us and just keep thinking and thinking, and we overthink situations, which isn't good in anything in life. And it just creates a very stressful environment, and we don't perform it with our peak performance. Yeah. So it is key about being mindful. Absolutely.
It's that reactive part of our mind. I even think maybe Kahneman calls it the lizard brain, right? Mm-hmm. So you're acting before you're even aware that you're acting, right?
Yes.
And sometimes you don't even know you've acted. These are these automatic thoughts. And so meditation, the goal of meditation, by the way, meditation can be just taking a hike, right? There's many forms of meditation, but all you're trying to do is give just a little bit of distance between that stimulus and then your action. So something happens, and instead of immediately going, okay, I'm going to do this and making maybe a rash decision, it just gives you a little bit of, a little space to go, wait a minute, right? To consider your actions and then hopefully do something a little more thoughtful.
Daniel Kahneman, he talks about system 1 versus system 2 thinking. Now, system 1 is that fast, automatic, associative. And that's where a lot of the biases appear in the heuristics, is when we make those fast associations. And one of the very popular heuristics that I talk about often is the availability heuristic. And that is about us making that quick association to an event because of examples or maybe even movies we've seen. For example, Jaws. That's a movie that scared everyone. To think that there's a shark in the little pool, the little areas where you usually don't have sharks. I think they're very close to the shore. And so, it's made a lot of people afraid of the water, or they think of sharks. And that's the quick thing that we automatically think of if we go swimming, when actually that risk of the shark being in shallow waters is very low. So it's actually, this heuristic revolves around the perceived versus actual risk. And so our perceived risk is much higher than the actual risk of an event occurring. And there's two other heuristics, controllability and uncertainty heuristic, which we can talk about a little later. But I just wanted to mention that regarding the system one, that's just a clear example. We want to try to get into the system two, slower thinking when it comes to decision making. That way we think things thoroughly, and it's a more controlled, learned thinking. So that's very important as well. And I want to talk about bandwidth constraint, because with meditation, part of being mindful, we want to clear our minds and sort of reset and get rid of the noise that's in our mind and the information overload that we have from everything, our cell phones, everywhere. We're bombarded with information, and simplicity is key, because our mind is a serial processor. It's not a parallel like a computer. So we have limited amounts of information we can process at once. When we get too many options, too much information, our decision-making suffers. Herb Simon, who was the father of behavioral economics at Carnegie Mellon, he said, a wealth of information gives us a poverty of attention. And I love that quote, because it's so true. We think that, we have all these options nowadays, and it's great. Yeah, it is. But we need to minimize the noise. And how do you apply that simplicity? I think it's fantastic that you meditate. How do you apply simplicity to your trading and to life?
Well, I think you're bringing up bandwidth is super important. And this is one of the things that as I've gotten older, I've become more aware of. No matter who you are, you only have limited resources. And I don't mean financial, although most people's financial resources are finite. I mean, you have limited time, you have limited energy, you have limited focus, you have limited patience. And the more external things that are drawing those resources from you, the less you're able to marshal them and focus them on something that's important. So as I've gotten older and hopefully a little bit more wiser, I've been doing things like cutting out all those extraneous things, just like we talked about before, the sunk cost fallacy, right? Being able to identify those and go, I don't need to do that, or I don't need to waste my time with this person. I think one of the big things is social media and the noise that is out there in the world. If you only were to view the world through social media, you would think it is a horrible place. But if you actually get out and you go in your community and you talk to people, you realize, oh, it's pretty okay. But that mindset, it's that this, I don't want to get off on too much of a tangent here, but this is one of the things that I think is really affecting younger kids. And we've seen this in studies, especially with teenage girls. Think about this. You're growing up with all the normal issues that a teenage boy or girl has, right? Does this person like me? What am I going to do with my career? Am I getting along with my parents? And then behind that are all these existential threats, right? Whether it's climate change, whether it's war in Ukraine, whether it's, balloons flying into all these things, because they're being thrown at you nonstop by the media. And so you're having micro and macro stress. You have these kids that are growing up in this environment that they don't have perspective. They don't understand that, the world's always been a crazy place and it always will be. And so the problem is they're seeing it through this very narrow lens, this very narrow filter, which is basically this, right? And it's giving them a distorted perspective on life. And I think it's very destructive. So bringing it back to us, it's the same thing, like trying to cut out all that noise. This is one of the reasons I'm a big proponent of technical analysis, because technical analysis is very objective. right? Is the price above the 200-day moving average, or is it below the 200-day moving average? I'm not smart enough, nor do I have the time or the energy to go into all the subjectivity around a stock or around an equity or around a macroeconomic event. It's noise to me. There's no way I'm going to know if I'm right or wrong about it. So to me, technical analysis is a way to filter out a lot of that excess noise and to keep you focused on what's important. And as our friend Brian Shannon always says, only price pays. So at the end of the day, that's what we're looking at, right? We're looking at price, and is it working for us or is it working against us? So that's kind of the way I tend to filter out the noise, I guess, both in the markets and in life.
I love it. Thank you so much. You mentioned Brian Shannon. Agree. I love the anchored rewrap, actually, especially it even simplifies the charts more for me. And I like the simplicity. I like clean charts. I like just looking at the most important factor as only price pays. That is the evidence that we need of what people are doing. It's about the buyers and sellers. Supply and demand is what makes up the market. And so the price, volume, time is key. And like the Venn diagram in the book, the anchored VRAP is right in the middle. So I love that. Great point that you make regarding that. I love macroeconomics because I find it interesting and fun. I do enjoy it. I'm a fundamentalist at heart. I love the mathematical side. But at the end of the day, in the market, it's about the market's reaction. It's about the people. And that's why price is the only evidence we really need. Follow price. So agree completely with that.
And don't get me wrong. If you get me in a good craft beer bar, I will have a discussion with you about everything under the sun, macroeconomic, politics, whatever like that. But at the end of the day, what the Fed is going to do does not help me make money today or tomorrow or next week. So I'm totally down with people that want to invest based on fundamentals or based upon a narrative. My only thing is, when the narratives and the technicals diverge, you have to go with the technicals, right? If you don't, you're going to get hurt really bad. And I just literally saw this happen in the last 2 weeks. So I was on a Spaces about 2 weeks ago, and one of the participants was talking about he had just built one of the biggest positions that he had ever had. And he built it based upon the fact that there were 3 big institutions that had taken positions recently in this stock. And there was a discussion on the Spaces between the participants. Well, was this a strategic position, or was it a position they just had to take to satisfy ETF requirements? And he felt for sure it was a strategic position, and went back and forth, back and forth. Anyway, long story short, it was Silvergate was the stock that he took the big position in. And if anyone, I don't know when this will air, but basically Silvergate has lost, I don't know what, in just the last couple of weeks, 50, 75, some ridiculous amount, right? So again, they were sitting there arguing, but if you had looked at the stock, you could see it was in a horrific downtrend. There was nothing bullish about that stock. And he thought he could interpret why these big entities had taken positions with some sort of certainty. And unfortunately, it really, I mean, I hope he didn't get hurt too bad, but that's another case of where the technicals and his narrative diverged. Now, if the technicals were supporting that narrative, I could say, okay, I get it, as long as you know where you're going to be out, where you're going to be wrong. So that's why I always say that, when it's between the two of them, I have to go with technicals.
I agree with you. Valid point. Excellent example. I feel sorry for that person. But if they, everyone should be aware of one key principle. It's a condition with the bounded rationality, and that's called opaqueness. And that's why, to your point, looking at the technicals and the price is key, because we don't know what's going on behind the scenes. There's so much we don't know about. We only get a small picture, and we aren't aware of our bounded conditions. And like that fellow that you talk about, saying how institutions had initiated large positions in that, we don't know what else is going on, but the technicals show a consistent downtrend. And the most important is price. And that's the most evidence, the greatest evidence that we need when making investments. And, there's just so many factors involved, and that opaqueness is key. There's so much we don't know about. And, also we could talk about the narrow framing that people do. And that is that things are black and white. I'm either going to invest everything in the stock or I'm not going to invest at all. It's that yes or no. It's just giving yourself two options. When the world is gray, we all know that for me, I don't believe in absolutes. I'm always saying it's almost a little more. It's this, it's never for sure or never, and the world is gray. So why do we give ourselves binary choices? It should be more of a sliding scale. And that's why I'm a fan of scaling in and scaling out and progressive exposure. How do you apply that gray state of mind to trading and to life?
Well, that's a great question because, like we talked about earlier, I've been doing this for 37 years. So you would think like I have my methodology just boilerplate. It's all fixed.
It's bulletproof, right?
Bulletproof. Right. But just recently, literally in the last couple months, I've been changing some things about my methodology. And it's all due to our mutual friend, Brian Shannon. So Brian and I have known each other for 12, 13, 14 years. He was kind enough to let me see some of his advanced chapters on his new book on anchoring VWAP. And full disclosure, I'm not someone who's used VWAP, anchored or otherwise, for most of my career. And I'm not sure why I was reticent to try it. But anyway, I was reading Brian's book. And not only does VWAP make perfect sense to me on a logical standpoint, like the difference between the parent and the child orders and how they have to go in over time. But in reading through Brian's book and the way he just laid it out, it made me really question some of the things that I've been doing for a long time. And one of them is making support and resistance levels that are very specific. Right? I tend to try to say, okay, here's support, here's resistance. Like you said, very binary. Above here, good, below here, bad. What Brian does is he calls it a level of interest. Right. So these support and resistance levels of interest, meaning it's not going to go right to the penny and bounce, or it may go past it and come back in. So I've actually softened the way I look at support and resistance. And now I'm trying to look at it more of not definitively what it does at that level, but how it reacts to that level over time. So I think it's always important to have flexibility in the way you think, in life in general, but certainly in the markets, and to never get too wedded to one way of applying your technicals. At the end of the day, it all comes down to outcome, right? You if something is working okay, but then you change it and it works better, okay, then maybe I should be changing the way I'm doing it. So it's been, I want to say, it's been exciting, right? Because because trading can kind of get boring, and to look at this and to go, okay, I'm going to make an effort to get into VWAP and learn more about it and to kind of challenge some ideas. It keeps it new and it keeps it fresh, and it really motivates you to go deeper and learn more.
Absolutely. Excellent points. I have so much to say about that. I think that's what we love about trading, is that it's exciting. We're always learning. And I could tell you and I are both the same in that we love to learn. And I call myself a philomath because that's what we love about books, right? We're always learning. I want to learn something new. And the market teaches us all the time. We always remain flexible, open-minded, and ready to adapt, grow, and learn. We're always tweaking. I'm always changing my style. I say as a person, I'm always changing. I feel like I'm very different. I've grown so much from even a year ago or 6 months ago. And my trading style has changed as well. Accordingly, as I change, my style's changing. Plus, I'm learning. And Brian Shannon's book has been transformative for my trading. The anchored VWAP is like now the top indicator I use. And I really wasn't using it much before then. I looked at the VWAP and I started applying the anchoring, but then I was like, where am I going to place it? I wasn't sure. His book showed me exactly, and everything makes sense. It like literally clicks with me because being like into economics and supply and demand is key with all markets to me, and how the anchor VWAP works that way is just amazing. So
Yeah.
my style has changed, and
Yeah.
now I'm using it extensively. So
Yeah.
it's
And
about
just to jump
yeah,
onto that point about
yeah,
where to anchor, because that's the key, right? Where do you anchor,
yes,
right? And you think, oh, it's very subjective, but I think we have to back up and we have to remember that at the core, trading is not first foremost about being right or wrong. It's about managing risk, right? So any tool that we use that allows us to manage risk first is a good thing. They've had studies about people that were that they traded based upon the astrology or astronomy, right? Which you would
mm-hmm.
think that's ridiculous, and it is, right? It's like Saturn's not going to predict the next winter. But what they don't talk about that is that they have at least some objective criteria for risk, right? For the planets do this, then I sell, right? Even having a basic framework for risk will put you ahead of 99% of the people. Then you worry about refining your win-loss rate. So I think being too worried about where you anchor something, I know it's a concern, and that's what I'm thinking about too. But I think the first thing is, using it, right? And saying, how does it work here? How did it work in this situation? And then refining it. But I think the first goal of VWAP is to manage risk, right? And then after that, it's whether you're right or wrong on a trade.
Absolutely. Risk management is always number one. And, when I first started out trading, I think like many people, we always think about how much are we going to make, and we don't always factor in how much we're going to lose. So, but over time, we've grown and changed our philosophies on trading. And I'm always thinking, this is my principle. And my goal here is to not lose my principle. And that's number one. And I think the anchored VWAP helps us with that. It gives us lower risk and higher probability trades. And the placement to me makes so much sense. Either the high volume events, the price high and lows, the fundamental events, or the time periods. I like the year to date. I always keep my year to date anchor VWAP on there. And I studied the book quite well. And I spoke with Brian Shannon at length about everything. And to me, the placement, I think it's sound. It's not even that subjective anymore. It just makes sense. Everything just seems to click. And so agree with you again on all that. And I love it that you just like, you're always learning and you're adapting and you're growing and you're changing. And that I admire because you know what it is? Growing and learning has to do with how quickly you can recover. And that's a big point. A lot of people, success is about, you always fall down. Look, we're all going to make mistakes. We're human. Okay. And success is not about not failing. We all fail at some point. We fail. And in order to be successful and to accomplish things, you have to give it a try. And when you try, you usually, make mistakes, and that's how you learn. So it's about how quickly you can come back and
But
recover.
let's zoom in on that topic, because you're saying that very casually, and if I had to guess, I would say that you were raised in a family or an environment that if you made a mistake, it was okay. Like you were encouraged.
Not
Like
at all.
okay. Well, so okay, that's also telling, because when I always say this, like if you're raised in an environment where your parents are a slob, either you're a full slob or you go the total opposite way and you're like a neatnik, right? So, but getting back to the family of origin thing, I think the reason a lot of people are afraid to take a loss, right, is because they see it as a failure. And if they grew up in a family where failure was, you failed, right? And someone was told how worthless they were, or, how come you didn't do what your cousin did, opposed to an environment where someone said, hey, it's okay to fail, right? Or a situation like you, where maybe you went the opposite way. This is, again, those family of origin biases that we bring into the market that we're not even aware that we're bringing
the
into.
personal biases that we have. I love it.
100%. I always say that, like, your success in the market will have less to do with what stocks you pick than what your relationship was with your mother, right? Or your father, right?
I
How
love
screwed
that.
up is that,
Absolutely.
right? I mean, how
Yeah.
crazy is that?
I love that. I was raised in a household, and I'll briefly touch upon it, where it was, making a mistake wasn't encouraged. And it was, it was about, if you're really good at something, you should be able to do really well. And, it was really tough. And what it does is it creates like a perfectionist mindset, and like, oh, if I can't do it so great, I'm not gonna move forward with it. And you know what I did? I read a lot of books. And that's why I told you, I think we spoke earlier about this. I love the nonfiction books, the self-help books. And I also started studying decision information sciences. And I studied that at the graduate level many years ago. And, I learned a lot from reading. And I saw, you know what? This is different mindset. These are from PhDs. And these are saying that, mistakes are part of the journey. And then Anthony Robbins is a big one, and I love his mindset. And now I've become all about positive growth mindset and empowered mindset. And I believe that, anything is possible. And, and challenges are part of the journey. And from those challenges, there are opportunities, and there are opportunities to grow. Through the difficult times, we grow the most. So Sarah Blakely, she's a self-made billionaire of Spanx. And I love learning from people like that, and they're self-made. That's so amazing. And she said that her father used to, at the dinner table every evening, say, "What did you fail at today?" And I was just like, wow, she was brought up in a household where failure was encouraged, because that meant that she went for it. Because you got to go for it. In order to win, you got to give it a try. You can't, and they say the things we regret the most in life are the things we didn't do. So you got to go for it and accept that you will make mistakes and just embrace them. And it's about being anti-fragile. Oh, I love Nassim Taleb. Have you read his books?
Yeah, Fooled by Randomness and Black Swan.
Swan, Anti-Fragile. I love it. That's a better Prometheus. Procrustes. And I love, so he talks about anti-fragile. And Marcus Aurelius, the Stoicism, I think it's a good time for us to go into Stoicism now.
Before we go into Stoicism, I want to ask you a question.
Yes.
So what can you pinpoint that turning point in your life, or that event where you're coming from a family that has this sort of framework, and now you've done a 180, but what was it? Why you? Why didn't you just go down the same path where you were like, oh, failure? I mean, can you pinpoint an event or a time or something that motivated you to go, I don't have to do that?
I love that. Excellent question. You are a great interviewer and podcaster.
You're now on my podcast.
I know, right?
Come on, let's go.
Okay. Well, I'm an only child, and I'm the first to be educated in my family. My parents are immigrants from Italy. And so I was the first to be educated. And at some point when I was in college, I started questioning things. And I said, maybe they didn't know because they didn't learn. They didn't study. They weren't familiar with all these principles that I'm being exposed to here as I'm studying behavioral economics and decision sciences. And, I started questioning. That's the first thing you do. You start questioning, and you're not really sure, but you keep going deeper into the topic. And then I met my husband, and I met him at the age of 23. And I was in my graduate studies in business. And he was amazing. He's so profound. He's an attorney. He's an inventor. He's a serial entrepreneur. He's everything. And he's a philosopher. And he actually studied philosophy. And so he actually was right in line with that thinking. And so I'm so blessed and grateful to have met him at that point in my life. And I was actually I was in the process of I was going to proceed with academic studies and maybe considering going law school and other avenues. And what I did was, at that time, I completed my studies, my higher and my graduate level, and I went into business, and we started our own business, and we did all that. And we just kept learning, and we're autodidacts. So we just keep reading books, studying
Yep.
and learning. And through that process, I learned from experience that my first business didn't work out. And our first
Yeah.
business that we launched, I'll just tell you about this briefly. Back in 99, that time period, we're forward thinkers, we're innovators. I like to believe that I am. I try to always think ahead. We're actually disruptors for our manufacturing company for thermal engineering, but that's another story. Okay, with this business, we thought, how smart would it be if we sold refurbished, used computers, like HP certified computers. And so we started a website. We had great supply chain. We had a connection of people who were direct certified HP computer sales. So we had the supply chain. We had a great website, and we didn't have any buyers. So what was that about? We had everything set up. It made sense, right? Who would want to pay top dollar for a new computer when you could just buy used computers, right?
Sure.
Well, people weren't ready to buy used computers online. In 1999, people were hesitant. Like, why would they buy online, right? So that first lesson I learned, it's key to know your market. And now at this point, I work from the end user up. It's like a bottoms up. I try to supply on-demand products and find out what the end users wants before I even create the product. But yeah, so that's key to know your market. Marketing is key as well. But so our first real business that we launched didn't work out so well. And that's fine, because we went on and thank God, we all worked out and we had many successful businesses since then. And so, but we learned from that. And through that experience of actually failing and making the mistakes and learning from that, and now I apply that lesson to knowing my market when I start a business, and it's not just about starting, maintaining the business. You're always tweaking, you're always learning, you're always adapting. If you don't adapt, your business isn't going to thrive. I mean, look at all these businesses like Amazon, right? They start out as a bookstore, but where are they now? They're the everything store, right? So they've adapted with the times. If they stayed a bookstore, I could tell you they probably wouldn't be where they are today. So it's about the changing times, growing, adapting. Sorry for the long answer.
I've had a great story about adapting. So one of my best friends back in the day worked for a company called AST Computers, which if you look for them now, you won't find them because they don't exist. But at one point, they were the third largest PC manufacturer in the nation. And so their philosophy, and this is kind of how a lot of PC manufacturers thought about things in the 80s and 90s, is they made everything. They made all the components, right? They made the CPU, they made the case, they made the fan, they thought, well, everything's got to be an AST product. And then there was this guy named Michael Dell who decided, oh, you know what? I don't need to make these parts. I just need to package them in a Dell computer, right? So they used to joke, AST used to joke that the best technology Dell had was a screwdriver, right? Because use a screwdriver to put all the components apart. Well, fast forward 25 years, AST doesn't exist. Dell is huge. So there's a great example there of not being able to understand your manufacturing process, not being able to adapt and thinking you have everything just set the way it's going to be, and then ending up going away.
Exactly. Excellent example. You are apparently so well read. You have all these great stories. I love your examples. They're right to the point, and amazing points that you make. Now, I want to ask you about your mindset. Apparently, you have overcome many challenges. For you to stay as a trader all these years, I'm sure you've had a few losses here and there. I'm sure you've experienced some setbacks. Were you raised that way? Is this who you were since you were a child? Or was there also a turning point in your life where you embodied that empowered mindset?
So that's a great question. And my path is somewhat similar to yours in that growing up, my mother was the dominant force in between my parents, right? And my mom was very set and specific in the way she thought that my life should go, right? She didn't really see me as Brian. She saw me as son, right? And here's what son should do. And, she had a very conservative philosophy, son should go to college, his son should get a degree, then son should go to a company where he wears a brown suit or a blue suit every day and works in a cubicle. And then after 35 years, son will get a pension and someone will huck a gold watch at son when he walks out the door. Right. And I just wasn't having that shit. That wasn't me. From the time I was 13, my mom and I just started butting heads because I was more, I don't want to say entrepreneurial because there wasn't enough thought process to say I was an entrepreneur, but I was just more into taking risks, right? And so I started trading and I started my own business, and I did what would be considered a non-traditional path, I guess. And the problem is that in the beginning, all of that was basically rebellion, right? It was fueled by rebellion. And because I am ADHD, it didn't have a lot of focus, right? You say having a target without discipline there's no point to it, right? So not only did I not have a target, but I didn't even have a discipline to get there. So I spent a lot of time in my 20s and 30s moving forward, but not moving forward in a very efficient or thoughtful way. And that was in my trading, it was in my business, and probably in my relationships. And as I got into therapy and learned more about my ADHD, became more mindful. It's like, kind of, you talked about learning things. Excuse me. When you learn things, you want to learn more. Well, when you, excuse me, when you start to learn about yourself, it's like an onion, right? You're just peeling back layers, right?
Excellent. Yes.
And the funny thing is, you get to it and you go, oh, I peeled back all the layers. And then you realize, oh, no, there's a bunch more layers, right? Every time you think you're done. So that process, basically kind of having a different outlook on how I wanted my life to be, who I wanted to be, than maybe my mom did. It sent me in a certain direction that was the right direction, but not maybe the right way. And then as I learned more about myself, as I got into things like Stoicism, that brought me back to a better path. And look, I still struggle. I still have to be mindful. I still have to say, am I drifting too far out here? But I certainly have no regrets, because the last thing I wanted to do with my life was to just work in a giant corporation and spend my whole life there. And ironically, that model, the model that when I graduated high school in '85 that existed, really doesn't even exist anymore, right? You can't really go to a company and spend 30 years there anymore. I mean, that's unheard of these days.
I love everything you said. Thank you so much for sharing.
A lot to unpack there, right?
I love it. But the onion is the same exact, that's the same term that I use about the self-discovery. And as you start peeling, it seems like there are more layers there, and you just keep peeling, and there's still more layers. And that's key. Our lives are like fluid, and we're always learning, and we're always on this journey of self-discovery, and we're always changing, we're always growing. It's dynamic. We're always in this state of flux. And so it's never like we reach that destination. It's like,
but not everybody knows that. Not everybody is aware of that, right? A lot of people just kind of go through life on autopilot, and the things that are happening to them, they don't make the connection that, hey, I'm changing, or I'm evolving. And that's why that mindfulness, right? That the meditative way of looking at life is so key, because otherwise you just waste so much time and energy doing things that are not productive for you, your family, your friends, your community.
It's like all these dead ends. It's about being present and taking in what happens to you. It's like really, I've written a couple books, but that was I think I have ADHD as well. It's so hard for me to finish. And maybe it's a little of that perfectionism coming in again to haunt me. And so I wrote about being present, and in one of my mini books here. And I talk about going down to the minute. And it's important to just zero in to the very moment of life. And, it's like we always look at our calendars, like the month calendar, and then we look at the week, and we're looking at things in weeks, and then sometimes even days. But instead of just looking at the day, let's look at the hour. And then let's look at the minute and let's really live in that moment. And it's so amazing. And it's difficult for me. Look, it's a challenge. That's what I like to tell everyone is that it's not easy. And it's okay, it's simple but not easy. I love that term. And there's a great philosopher. My husband's actually philosophy professor said that in one of his books. Bradford, he's awesome. He's a professor here in the SUNY New York system. But so basically, it just goes to that if you zero in on the very moment, and it's like you see the beauty in life. You see the beauty in like the flower. You tweeted these beautiful flowers today. This pictures of flowers. You said how Southern California is now having rain, and all this water is bringing all these beautiful flowers that you haven't seen in years. And I just, in that moment, I looked at your flowers and I felt like I was there, and it just so beautiful.
Yeah.
And, just to see those colors and you live in that moment, right? Did you feel that? That beauty of the flowers?
Yeah. Yeah. I mean, it's interesting talking about this because there's a tendency sometimes in people, we were talking about Stoicism earlier. There's a lesson in the Daily Stoic that talks about the monk on the hill, right?
Mm-hmm,
And a lot
yes.
of people, they try to, they think that the idea is, I got to get away from all the hustle and bustle in life, and I got to go find that spot on the hill where I can have peace and where I can meditate and do all stuff. And that's all great. But here's the thing. You can't live on that hill, right? You have to come back into the real world. So, you have to become somewhat anti-fragile, like we talked about before with Taleb. But the other thing you have to do is you have to be able to sit and make a friend of discomfort, because there's a lot in life that's discomforting. And there's this fantastic story that John Cleese from Monty Python told. You can find it. It's online. And many people don't know that John Cleese had a whole separate company that basically produced these videos for businesses, right? It's a whole business that he had for about 20 years that were like instructional videos. And so he would go on these speaking tours and talk to business leaders. And one of the talks that he gave that really changed my perspective on this is he talked about how the creative process for Monty Python was that there were 6 of them, and they would all split up and they would write their sketches. And some of them would write as teams and some would write as individuals. Then they would all come back together and pitch their sketches, and they would pick the ones that would go on the show. And he said, I was always fascinated by the fact that there was one person in the troupe, and he didn't name who it was, who I knew was much more talented than I was. But every time we would come back and we would pitch our skits, mine were always better. And I couldn't figure out what it was. And so I watched him and I observed him and I talked to him. And what Cleese found is that when you're in the creative process and you're sitting there, okay, here's the premise, all right, and then how do we get to the next part? There's discomfort there, right? They're like, right, I want to find a solution to this. I want to wrap this skit up because I don't like the fact that I can't come up with an idea. Cleese was better at just saying, okay, let's just sit with this. Let's not make any rash decisions. Let's work through it, give it time. And so maybe the first idea he came up with, he'd say, nah, that's not it. Second one, nah. But by the time he got to the third one, well, that was a much better idea. Whereas this other member of the troupe, he didn't like discomfort, that feeling of not knowing the conclusion. So the first idea he came up with, he goes, I'm going to go with that, right? And so his skits were not as fully formed and fleshed out because Cleese was able to say, yes, this is uncomfortable. I don't like this, but it's okay. I trust the process and I'm aware of what's happening, and was able to push through that. And we have discomforts in all aspects of life. There are discomforts in the market when you're down on a position, right? Or when you're not sure how the market's working. There's discomfort in interpersonal relationships, right? And if we can just get to be an ally of discomfort, to understand that it's part of the process and not want to reactively make a decision that may not be the best decision, I think ultimately it only benefits us.
I love everything you say. You must be the life of the party. I bet everyone probably wants to have you over for parties so you can tell us of all these wonderful stories, because
I would be if I wasn't such a bitter antisocial person. I very rarely see people, but I appreciate you saying that.
I love it. I love exactly. I'm like, oh my God, everything you say rings so true. And I'm getting so excited. I'm too excited. I want to start with a quote by Marcus Aurelius, Meditations. Actually, probably one of my favorite books. I read it so many times and I just keep reading it. And like we said before, you keep reading things throughout your life. And it's funny how you see things differently each time. And he says, the blazing fire makes flames and brightness out of everything thrown into it. To me, that's anti-fragile. And you take all the adversity, you take the challenges, you take the discomfort and the boredom. Boredom is a big one too. I always say boredom precedes genius. And you take all that and you withstand it, you're resilient, and you turn it around and you get that to empower you and to come back stronger and better. And that's why I think it's a perfect segue to Stoicism, which your example was a clear example of that. How, it's important to have self-control and fortitude over these destructive emotions. And, you made a great point earlier as well, how we have we have our feelings and our emotions, but we want to lengthen that time before we react. And we don't go and impulsively react based on those feelings. Look, we're human, we have feelings, and it's healthy, it's normal, but it's about not reacting based on those destructive emotions. Look, many times our positions are down in trading. It's normal. And what do? Some people, they quickly want to just sell, but they just can't take it. It's just so painful. And, it's different. Stop losses are a different issue. But, it's about holding back and not reacting. It's maintaining neutrality. And so we want to not be too high or too low. We want to try to remain neutral. And that goes right into Stoicism. And I love Epictetus. He's one of my favorites in reading. I love reading his quotes. And I think there's a book I have of his. I need to read it. I must have it in my library, but it's not what happens to you, but how you react to it that matters. And, you can't control the market. We can't control what happens to us, and what happens out there. But what we can control are our actions, our thoughts, and our reactions. And another thing we can't control, which is important, I got to tell you, Brian, this is something I learned, unfortunately, a little later in life. I wish I had known this as a teenage girl, because I'll tell you, I have all boys, just so you know. We have 3 sons. So I'm not experiencing the high school drama with girls, but it's challenging. It was for me. And I cared too much what other people thought. And I think that a lot of people go through life feeling that way. And that holds them back from doing things in life because of what people think. And that's another important principle in Stoicism. We can't control what other people think. We can't change their minds. So, what Stoicism says, then, oh, well, don't let it bother you, right? Because we can't change it. There's nothing we can do about it. So let's not react to that. So
I think there's a fundamental misunderstanding a lot of people have about the purpose of Stoicism or meditation or mindfulness. I think people think, well, the goal is to eliminate that emotion, right? So I won't be angry, or I won't be fearful, or I won't be insecure. And we can't do that. We can't eliminate emotions. We're human beings. The purpose of all these disciplines is to shorten the half-life of those emotions. So, before, let's say someone that hasn't practiced Stoicism or hasn't done meditation, and something happens and they get upset and they're angry, they may lean into that anger, and that anger may stay with them all day long, or it may stay with them for a week, or some people, hold grudges for their whole lives, right? The purpose of all these disciplines is to shorten that half-life. So the half-life meaning how strong it is. So you get to the point where something happens, you get angry, you acknowledge, you go, okay, this is upsetting me. Okay. But you're processing it, and you learn to process it faster and faster and faster. And in the meantime, not react to it. Right. And so that's the goal of all these things, not some ridiculous, impossible idea that we're going to turn into automatons and we're just going to make all the rational decisions every time.
Absolutely. Excellent points. For sure. I mean, the Stoicism and the decision sciences and all the biases we spoke about all go hand in hand. It's about making more accurate judgments to maximize the expected value of our choices. And so by minimizing, I love it, that term you use, the half-life between that reaction to our emotions, the anger, which is normal. We're human. We have anger. There's a reason why we have all these emotions. But it's about that, as well as being aware of the biases that we spoke about and the heuristics. And that way, we can have higher expected value of our choices and hopefully higher expected value of our trades. So, it's very important. And I also like to touch upon the 80-20 rule. And I love how you use it. You're like, I'm 80% technical, 20% instinct. And to me, that was funny because I love the way you use the 80-20. And I'm also very intuitive with life, and with decision making. We don't realize how intuitive we are with many disciplines. It's just because we have learned over time, we've become expertises in many different fields based on our experiences, and we tend to react intuitively. And the 80-20 rule, I apply that to everything in life, Pareto's principle. And it's always like my husband says, is the juice worth the squeeze? And it's like, is that extra 20% really worth the 80% effort? Or am I happy with the 80% results from the 20% effort? And I always try to move that like that. How do you apply that? I know I love the way you used it in your bio, but how do you apply the 80-20 principle in your life?
Well, I mean, the 80-20, I think the traditional thought process is like, if you have a business, you're going to get most of your revenue from 20% of your product line. I'll give you an example. So I had a company that we used to do installations for interior design firms, high-end furniture manufacturers. And so I had, I look at markets by three general segments, right? So there's high volume, low margin, right? There's low volume, high margin, and then there's the middle, right? And those two extremes are the smallest segments, right? The biggest segment is in the middle, right? And because everybody as a consumer wants to get more for less, right? And so I made a decision in my business that we weren't going to compete in the middle, right? I was going to compete with everybody else there. We were going to either take very low volume, high margin jobs or high volume, low margin, right? Ones you can just kick out real easily, right? You're making a little bit, but you're doing a lot, or ones that take more time, but are big paydays. That was 20% of, the market, so to speak, right? So that is what powered most of our revenue. But when I talk about 80-20 in trading, I'm talking about 80, I think I say 80% technicals, 20% gut. So the way that comes into play is, after doing this so long, there's just some patterns, some price behavior that is like seeped into my DNA. So let me give you an example. So let's say you see a stock.
Tacit knowledge, it's called.
Right. Yeah. So let's say you see a stock that's been on a run, pulls back, and let's say maybe it pulls back a little bit more than you think it should from a technical standpoint. Like I'm generally a fan of a 25 to 33% pullback. That's healthy after a run. If something starts getting more than 33%, and it gets around 50% of a pullback, there's a better chance that it's going to fail. But let's say that you get past that 33% and you're watching it and you're noticing every day that you're just seeing this intraday buying, right? It's not quite able to roll over, and it keeps going like this. But technically, there's no real objective area where you can say this makes sense. So that's where the gut comes in. And so the way the gut comes in is you say, I think that this thing is ready to turn around. It hasn't yet. And maybe I would take some probing positions, some small positions where I can still manage my risk, even though I don't really have a technical reason to be in there, and then see if it does play out, if it does recapture the technicals, and then go into it more fully, right? So it's those subtlety edge cases where you just have to go, something here feels XYZ, but you always have to approach it with a, from a risk standpoint, right? I would never blindly just on my gut say, I'm going all in on this. So that's kind of how I think about 80-20 when it comes to trading technicals versus gut.
Thank you for sharing that. Yeah, 80-20 in the business as well. Another point I'll add to that is that they say that 80% of your revenue, like you said, comes from 20%, and then vice versa. That's I just love it. I love when I saw you have that. And now you said how it's instinct and intuition, and I'm going to have to bring up the expertise-based intuitive decision making, which is something I write about and I find fascinating. And day traders utilize that skill. And our sons are chess competitors, and my oldest actually won Blitz. He was the youngest New York State champion for Blitz a couple years back. And I wrote about how it's using the expertise of intuitive decision making, because they're fast subconscious decisions that he makes. They're like, there's bullet chess and then there's blitz chess. It's like only a few minute game. And he just obviously you don't have time to think. He also does chess that's like 6-7 hour games, but with blitz you have to move so quickly. So it's based on pattern matching, and this comes from years of experience, like you, 37 years of trading. You've basically deliberately trained yourself. You have embraced those challenges, and you're able to accept that feedback loop that enhances your performance. A lot of people, like we said before, it's hard to take that criticism, and it's difficult to have that discomfort. But it's why working through those discomforts and getting past those hurdles with deliberate practice and learning that you establish these recognizable prototype of patterns in your head. And you see that pattern matching. You can't explain it.
But also understand the context, right? Because your son would never do the same strategies in blitz that he would do in his other 6-hour game, right?
Exactly.
So he understands that in this context, that intuitive sense makes, that's something you should do. And that's what I was talking about. Like when I'm using my intuition or guts, it's in a context though where I'm still managing my risk, right? I'm not doing the gut thing in a normal sized trade or in a normal sized position. So context is key.
Absolutely. Great point. It's absolutely. We actually, when my husband would coach him, and because he's in chess himself, and he would always say, he always remind him, because they would have a blitz tournament in the middle of the chess tournament. The chess tournament's usually like 3 days or longer. And in the middle of the tournament, that usually those games are like 6 hours long, there would be a blitz tournament. So he would say to him after the blitz tournament was over, he'd be like, okay, time to reset.
Right.
Forget about everything. Forget about everything you did in that blitz and be ready to system 2. Think slowly, deep, and contemplate like a tree all these different moves. And just forget about that fast thinking. And it was difficult. That transition is very difficult. And so it's
that's why traders have a hard time trading in 2 different time frames simultaneously, right? Someone may be day trading, but then they forget that when they're swing trading, not to be as reactive, right? To give a stock more room to use different indicators, right? And it's very rare to find somebody that can trade in different time frames at the same time. And that's why I always tell people, anybody that's going to trade, before you put $1 in the market, you should be already funding like your long-term retirement and all that stuff. And that should be something, in my opinion, that you don't manage. Like I've got, people look at me and go, oh, you're a trader, right? I go, yeah, but I have long-term funds. I have retirement funds. I don't do anything with them because I don't, it's too hard for me. Like, I know my weaknesses, right? I don't want to sit there and try to micromanage a stock that I'm going to hold for 20 or 30 years based upon what I'm seeing today in the market.
Mm-hmm. I love that. Now I have to ask you, please share with us your trading styles. I think you do some options, you do shares, you do a mix of all the above, I believe. And please tell us about your time frame and what works for you.
So in an ideal world, what I would like to do is I would like to hold a trade for 3 days to 3 weeks, right? So swing trading. And the reason I say that is because, again, I have a life. I have lots of other things I do besides trading.
We know
And so
that.
right. So I'm trying to quantify, like, I don't want to sit and stare at every single tick. And I'm trying to quantify what's the best ratio of effort towards reward. And for me, what I've noticed over the last 35 years is it's usually a swing trade, right? You get the best bang for the buck. Unfortunately, the market doesn't give a shit what I want, right? And sometimes the market is not in a swing trade mode like we've seen the last year. So when the market is in a different mode, I have to be more reactive. I have to be more of a day trader. I also will scalp NASDAQ futures. Here's a tip. If I'm scalping NASDAQ futures, that's a really bad sign because it means the market's really directionless and I'm trying to make micro moves. I would rather not be doing that. I would rather be in a position that I can manage over a 3-week period. So that's my preferred method of trading. I trade mostly equities. I use options. I've done spreads and I've done a little more exotic stuff here and there, but generally I use options just for outright leverage. I will occasionally, if I think a position, if I want to get into a stock at a lower price, obviously in an uptrend, I'll sometimes sell a put, right, which will give me a premium and get me into the stock if it goes lower. But generally I stick to equities. Although I have recently with my subscribers in the Lund Loop done a real-time experiment in writing covered calls. I've written covered calls in the past, but this one is related to longer-term holdings, not the ones that I have managed professionally, but like my longer-term ones. And I just thought to myself, I had a lot of time to think in the pandemic, as we all did. And I started thinking to myself, could I take some of these stocks that I know I'm going to hold until I retire and just mechanically write calls against them every 30 to 45 days just to bring the cost basis down over the next 15, 20 years. So I recently started doing that. I have to tell you, it was very interesting because it sounds theoretically easy. Like I'm just going to be very mechanical, like we talked before. I'm going to be an automaton. It's 35 days. I've captured 75% of my premium. I'm just going to roll it out. But that trader in me, right, goes, well, I know the stocks really rallied. Maybe I should wait a little bit before, So I'm always trying to look at other things that will work, that make sense for me. But if I had to choose, if the trading god said, what sort of market would you want for the rest of your life? It would be a trending market where I could just do swing trades.
Love it. I also love swing trading, but hasn't been as fashionable lately. And my swing trading has turned much shorter than what I prefer. And so absolutely, I am an options trader. And I do utilize that covered call strategy, but I always tell people it's not passive income. It's maybe semi-passive, but you have to watch it. There are times that you can get called, then you roll out. There are other times that, you just have to keep an eye on it. And then I like selling puts as well for premium and to get stocks that you may want to buy at a lower price if you put those shares, if it gets lower than that strike price. So there's so many different strategies, but very interesting to hear you speak about that. And I'm dying to know about your holistic approach to your trading.
Define that for me. What do you mean by my holistic approach?
Your holistic approach to the markets, trading, and your mind, how you utilize all these elements that we spoke about, how you apply this mindset, stoicism, and your risk management, your simplicity, your meditation, everything, and how you apply it to trading. And what is that holistic approach?
That's interesting. I don't know if I have a quantifiable holistic approach, but what I will tell you is I like to, I guess it's the wrong word. I like to give back. I like to teach, I guess. And people will say, like, well, why do you spend your time talking about this? Why do you spend your time talking about this, writing this? Why do you have a service, whatever? And the honest answer is that it's really selfish, right? What I'm doing when I'm sharing something online, when I'm having a podcast here and I'm talking to you about trading techniques, when I'm in the Discord for my subscribers, it seems like I'm sharing and I'm helping other people, and I hope I am. But what I'm really doing is I'm self-reinforcing, right? For me, you don't go to the gym one day, work out, and stay in shape for the rest of your life. I know what my weaknesses are, right? I know that I have a tendency to go on autopilot, but by sharing and reinforcing and writing and interacting with people, I am reinforcing my own rules that help me, not blow up my account, that help me be profitable. So I guess that would be the most important through line. I think it's the same reason I'm a voracious reader, right? Why I'm always looking for new information, because I'm trying to reinforce those disciplines and those ideas that keep me on the right track. So I'm not sure if that's the right answer, but
It
that's
is.
the best I can do.
Fantastic answer, actually, because it just shows us all your honesty and your transparency. And that is key. That is such a valuable, noble quality. And I value that. And I'm so happy to have met you through Joe Fahmy, our mutual friend, who's amazing.
Yeah,
And
speaking of great people.
yeah, he's awesome. I love speaking with him. We speak quite often. He's great. And what you touched upon was having your service and your wonderful community. And it's a very supportive community. And I want to talk about that more, but it keeps you accountable and it keeps you on your path. And you know what? Look, I give back, and everything I do, I want to help other people. And that's why we do the podcast, is to share knowledge and experiences, our thinking that we think is enlightening and it helps us. We want to share that with other people. And look, we all elevate together. It's a collective consciousness. And I believe success is a abundance mindset. We're here for a reason. Okay. And we all have different beliefs, but our common belief is that we need to do good and we need to help one another. And we're here to elevate and make the world a better place than when we entered it. And so I know you share that mindset, because I have to say, what you provide with your service, I actually looked at the price. I was like, what? You provide so much. And it's only $24 a month. And before we get to Lund Loop, I want to ask you one quick thing that we were talking so much, and I had so much fun talking to you about all these topics. I wanted to ask you, what was the catalyst that really got you to have all of this come together? Now, you were brought up in a different type of household, and then you decided that wasn't for you. When did it actually, was there a moment, like an aha moment, where you said, I did right. It was a good decision and I'm on the right path and it all makes sense? Was there a time when that happened?
You mean in life in general? You mean with the Lund Loop?
Yeah, with life in general.
Yeah. So you said before, you said, you like me, or one of the reasons you like me is because I'm honest, right? I'm probably too honest, right? I don't really have any qualms being totally transparent. So in that spirit, I will tell you that I think the moment was, it was certainly during therapy. And I remember my therapist was saying, kept pushing the idea that I was an anxious person. And I was really like, yeah, I don't think so. And by the way, like, I'm totally open to anything. My attitude is like, I want to face something head on.
Yes.
And if I have an issue, be super, okay, cool. Let's deal with it. Right. So like when ADHD came up, that made perfect sense. Like I did like an inventory of my whole life since I was like second grade. I go, oh, that makes perfect sense. I was almost excited, right? Because it explained why a lot of things I did in my life, didn't work out or whatever. And so I said, hey, let's figure out what we can do this. We did a lot of cognitive work and everything. But my therapist kept pushing on the idea of anxiety, and it just didn't ring true to me. I was like, I don't know. I don't feel like an anxious person. And the thing is I thought an anxious person was like the character of like Woody Allen, that, always, and I wasn't like that. But what I didn't realize is that I just had a general anxiety. They call it GAD, general anxiety disorder, meaning that my baseline was already anxious, right? Was always worrying, overthinking, catastrophizing, a lot of these extreme ways of thinking. And because that was my baseline and I had nothing else to measure it against, I didn't realize that that's how I always was, right? I would have moments where something acute would happen. I'd feel anxious, but then I'd go back to normal. And I think now I'm not anxious, but I was really already anxious, right? So when I realized that, it was a game changer. And I said, yeah, I am an anxious person. I do worry too much. I do catastrophize. I do have circular thinking, right? And the first step to solving any issue is to identify, right? To say, oh, this is the issue. And so, that was probably the major turning point in I shouldn't say turning point. It's not like he had a bad life or anything like that, but it just was so clarifying.
Yeah, like an awakening.
And there's two ways you can look at something like that. Because this happened when I was like 44, 45, so relatively late. One way of looking at it is like, oh God, all those years I wasted, right? Which that's kind of the sunk cost fallacy, right? But the other is, oh my God, how great that I figured this out. And can, it's like taking a 800-pound coat that you didn't know you were wearing and going, oh, I can drop this thing. So I would say that's definitely without a doubt. And the other thing is once I figured that out, so many other great things flowed from it, right? The way my relationship with my wife, with my friends, with myself, all the insecurities or hangups that I had carried from, childhood, from family of origin. Not to say they just went away, but I was like, oh, that makes perfect sense. So it was an epic moment in my life, I would say.
Oh, I'm so happy for you. Like we said before, many people go through life never having that. And it's better late than never. And so that's wonderful. I'm sure the passion that you feel and the connectedness and closeness you feel with everyone else, and most of all yourself, makes up for all those other years. And it's like, would I rather have 40 not so great, not fully awakened years or 80? Of course, you take the sunk cost way and say, I'll take that, the lesser amount. But that's amazing story. And thank you so much for sharing that. I'm also a fan of therapy, self-reflection. And it's important to not be in denial. And that's key. See, I was brought up in a household where you just pushed your problems away. You denied them. By not acknowledging them, we thought they thought they would go away. And so,
let me just add on to that, because it's an important point. I'm a fan of therapy, but I'm a fan of therapy with real progress, right? Because there's a lot of people that will go to therapy and they will just go to therapy for 10, 20, 30 years. And the therapist will go, okay. Oh, can you unpack that? And here's your $200 bill. Because there's no vested interest for them to push back. Because if they push back and you get uncomfortable, you may go, I'm not going to therapy again, right? So if you're going to go to therapy, the first thing you have to do is make sure that your therapist is committed to measurable progress, right? You're not in there just to talk for an hour for $200, right? There should be a goal. What are we trying to accomplish here? That's number one. Number two, and this is super important for couples therapy. And by the way, that could be a married couple, or it could be a parent and a child, or it could be any two people. If you're going to go into therapy as a couple, my suggestion is, first of all, start separately. Okay. Because what people like to do in couples therapy is they go in there and they think their job is to win the therapist over to be on their side so that they can tell the other person how bad they are. And that's how they start, right? But really, the purpose of therapy is to look inward, to be introspective. So you go to therapy separately, you work on your own issues. And then once you've got some traction there, you come back together, and hopefully you both have the attitude of like, I'm not going to be blaming this person. I'm going to be taking ownership for my issues. And if we both do that together, that will strengthen our relationship. So fan of therapy, but with some concrete parameters that are designed to actually make progress and move you forward in it.
Absolutely. Great points.
We've covered a lot of stuff on this podcast, haven't we?
Absolutely. That's
right?
Excellent. Self-reflection, knowing yourself and understanding yourself and your shortcomings. And by that, then you can understand your spouses as well, and be more understanding and empathetic is key.
Yeah. It's like James Clear talks about those upstream habits. They help all your downstream habits. And the same thing, like upstream mental health, right? Or progress helps everything downstream.
Absolutely. Excellent points. Yeah, you have to track that progression and everything. And thank you so much. Now, I want to know how you came up with Lund Loop. How'd you come up with that name?
Lund Loop is the worst name in the history of names for a newsletter. It's because the Lund Loop is an outgrowth of a blog I started in 2007, right? I was trading full-time back then. And one of the things I realized is, there's a lot of time when you shouldn't be doing anything, when you should just be watching. And to fill up that time, I started to blog just on WordPress. And it was totally, I think I was called ADD Trader. That's what I was. So I was anonymous. Started blogging and didn't really expect, I wasn't blogging for likes or views. I was just really journaling for myself. They say that thinking is programming for your brain. I feel like writing is the debugging, right? So I was journaling, pushing these out, and people started to actually ask me questions, right? And interact. And so I started writing back. And then I changed it to the BC Lund blog, which is Brian Christopher Lund, right? And then at some point, and I still don't even know how this happened to this day, Phil Perlman, who was the head of social at StockTwits, reached out to me and said, I love your blog. I want you to join the StockTwits blog network, which back then was, Josh Brown, James Altucher, Brian Shannon, Joe was on it, Howard Lindzen. I'm like, I can't write like these people. Are you crazy? Anyway, joined that. Long story short is the Lund Loop is an evolution of that blog. And I moved it to Substack in 2000, right when they started in 2017, 2018. And I don't know. I was lazy, and I was like, what goes with Lund and loop? And so I thought people will be in the loop, right? My sister, who's a graphic designer, she designed a loop made out of a Hot Wheels track, which is kind of like a retro look, right? So that's how I came up with the worst name in the world. So
I actually think it's a pretty awesome name.
That's because you're nice. You're a nice person. That's why you would say that, of course.
I am being honest. And I think of feedback loop. And that's really important.
Interesting. Yeah.
And feedback loop is very important. That's how you enhance performance. So I was thinking, wow, he's brilliant. Well, you're brilliant anyways. But I was like, wow, Lund
You're giving me too much credit.
I was like, how cool. Not only does it sound nice together, but I'm like, maybe he thought of feedback loop. And it's like a constant loop, and you're constantly growing, you're learning, and you embrace the challenges, and you keep growing. I'm like, it's a Lund loop. And maybe it's like a community, and you have a very supportive community, and you keep bouncing ideas off of each other. You're very honest, transparent, and accountable. And, I like I said before, I think that together we're all better. And it's like, all of us in a community We can, bounce off ideas like I hope we did today in our podcast, and
Yeah.
we can grow and we can think of new ideas. And that's how, humanity has just continually improved upon it.
And I'm going to tell people that's how I came up with the Lund loop. I'm going to say it was a feedback loop.
Absolutely. I think
that'll
it's
be my
so
new
cool.
story, right?
Please tell us the services you offer, Brian. You are amazing. I'm going to just tell you, you're profound and you're amazing. And I thoroughly enjoyed this podcast more than anything. Tell us all the different services you offer in your community. I know you have Discord as well.
Yeah, so I'm just going to tell you, again, probably too honest here, but I'm just going to give you the idea behind the Lund loop. So I'm already doing work myself for my own trading, right? Every day I'm looking at charts. Every weekend I'm pouring through way too many charts. And so this content that I'm putting out, I would be doing either way, right? But what I like about the Lund loop is, like you said, it is a community. So every day after the close, I send out a daily update that shows actionable setups. I give you my feedback on the market for the day. On the weekend, I have an expanded version of that. I post charts in there. We have a Discord that's got about 450 people in it that has maybe 150 active during the day. But what I decided to do in the very beginning, and you remarked about this, about the price, right? So there's trading services out there and newsletters that charge $1,000, $2,000, $3,000 a year, and they will give you signals when to get in and when to get out. And 90% of them aren't really doing any trading, right? They're just running a trading business. So what I did is I put what I thought was a reasonable but very small price to filter out the assholes. Okay. So just a reasonable price. If you subscribe, you're making a commitment, right? You're saying, I'm putting a little bit of money on the line. I'm making a commitment to subscribers. So it's a two-way street, but it's not prohibitive. It's not where people, nobody should say, I can't afford it, because it's pretty cheap. But that little friction, right? Just that little amount of money, it filters out all the people that you don't want from FinTwit to be part of your community. So we have this Discord where people are free to share any ideas they want, whether they're bullish, they're bearish. I don't care what position they have, what they think the market's going to do, as long as they are respectful, right? And as long as they treat people the way they want to be treated. And I'll have to tell you, in the 2 years that I've had Discord, I've only had to kick out one person, right? Which is amazing, because if you see the toxic sewer that is FinTwit, you know what's out there, right? But everybody that is part of my community, knock on wood, wants to help everyone. It's great to have 400 sets of eyeballs on the market, or 600 sets of eyeballs, opposed to just mine. It helps me probably more than I help subscribers. So if you're someone that is interested in being part of a productive, helpful, supportive community, you want to kind of whittle down all that noise and all the work and get a really nice, concise list of opportunities each day, we'd love to have you in the Lund loop.
Absolutely. Sounds like a fantastic community.
Not much of an elevator pitch, right? That's not too concise, but that's,
I love it.
I'm overly verbose. I know that.
No, I love it. That's how we communicate. We share by being verbose. And you describe it so well. You learn, you teach people to fish, and that's key. You don't give the people the fish, and that's important, because we're here to learn, and it's an educational, supportive community. I love that. And we forgot to touch upon another favorite bias of mine. That's the loss aversion, and way to overcome it is by framing and the neutrality. And I love what you said about your website. And that reminded me of your community. That reminded me of the framing. And you said 5 reasons why you should not be part of this community.
Right.
And I thought it was really fun. You're like, because you like the toxic sewer of the FinTwit community. And you came up with these 5 great reasons. And what you did was actually made it a neutral choice by framing it in 2 different ways. Not only did you say, okay, it's $24 a month, which I think is cheap, and it keeps, or inexpensive is a better term, it keeps people honest. It keeps them accountable. Like, yeah, it doesn't just make just anyone subscribe. It's a real person because they're paying something, and that's important. But you also framed it in a way you shouldn't join the community if you like these things. And I got to tell you, there's no way I like any of those 5 things. So to me, I have to join the community because I just like those 5 reasons not to join. So I thought that was really smart.
Look, I'm the worst marketer in the world because I don't like being sold to, right? And I don't want to sell anyone anything, but I could totally do the, like, hey, this is the greatest place in the world and you want to make a ton of money, and it's like I couldn't live with myself. So I only want people in the community that want to be in the community, and I want them to level set right off the bat. Like, before you go into the Discord, you have to read a document and it tells you, here's how we act in here, right? And if you act this way, no problem. But if you, there's any racism, sexism, blah, 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 all that stuff, like you're gone. Like we're not here for that sort of stuff. Life's too short to deal with that stuff. So
absolutely. I guess I won't be seeing you selling any mattresses anytime soon, right? Yeah. That was a great tweet that you said. Somehow when you buy tires or a mattress, you feel like you're always getting scammed, right?
Yeah, we talk about opaque. I mean, mattresses, it's like the company that I had, we would have designers that would obviously, part of the installation they do is they order mattresses. And there's these big, massive factories in the Midwest that make mattresses, and the same mattress that comes out with the Sealy ultra premium, blah, blah, blah brand goes out with the Kmart, or I guess Kmart's not around anymore, but whatever, some lower brand. They're the same mattress, literally the same mattress. And there's no transparency in pricing, or like that, along with tires and the real estate business, still has not been disrupted. Like, I don't know how realtors can still charge 3% and 6% for a standardized transaction, but for some reason those areas have pretty good moats around them.
Exactly. And that's the last point I want to say. You're a thinker. The world needs more thinkers. And unfortunately, in this day and age, I think since COVID, it's gotten even worse, and social media, there's groupthink, there's echo chambers, filter bubbles, and people are just not thinking anymore. So it's so important to be a thinker and to question things. And when you sent that tweet, I agree with you completely. And I love the points you make, but you're a thinker. So always keep thinking. And we appreciate you so much, Brian Lund. It's so refreshing to have someone so profound, thinker, and so honest. And I'm honored to have spoken with you today. I had so much fun.
Well, you are too kind, and I appreciate having me on this podcast. And I hope someday in the future that we're able to sit down face to face and have these same sort of discussions.
Absolutely. I used to live in Southern Cal. So we're meaning to come back out there. It's so beautiful out there. We're in New York now, but I love it out there. So we'll definitely meet up. But you got to promise to take us to some good Vietnamese food.
Yeah, I took JC and his crew to a place out here, and they lost their minds. They loved it so much.
I love Vietnamese food. Like, love it. The real authentic. And it's just difficult to find even in New York, because you need those fresh ingredients. And so I'm excited. Well, I can't wait to meet you. And okay, Lund Loop, is it lundloop.com, or is it on the site?
You can go to brianlund.com, lundloop.com. You can just Google my name. It will show up somewhere. It's been out there for a long time. So
awesome. Thank you so much.
And thank you.
Thank you to all the listeners. And we'll see you next time. Thank you for listening to the Rose Show podcast. Please visit RosannaPrestia.com for more episodes. See you soon.